Welcome to Tax Insights, presented by Hawkins Ash CPAs.
Good morning, listeners. Welcome back to Tax Insight every week here with Jeff from Hawkins Ash on the Lakeshore's Good Neighbor, WOMT. Jeff, good morning, my friend.
Good morning, Terry.
The Secure Act 2.0.
Yes, that's what we're going to talk about today because Congress is working on making changes to retirement plans again. Now, I can't say this about a lot of tax bills, but I kind of like some of the changes that they make in this bill. It's currently called, like you said, Secure Act 2.0. So let's talk about it.
All right, so the first change is an automatic enrollment, correct?
That's right. So, any new plans established after this bill takes effect would be required to enroll employees in the 401k plan at a rate of 3%. Now, not only this, but they'd also be required to increase the percentage by 1% each year until the employee is putting like 10% away. Now, employees would still be able to opt out, but studies have found that many don't. And there's also exceptions for small businesses with 10 or fewer employees or certain startup companies.
Now, the legislation would also change how the employer match works. Is that correct?
Yeah, because right now, an employer match cannot go into the Roth bucket. We've talked about buckets before, but it cannot go into that Roth bucket. It has to go into the tax deductible bucket. Now, under this proposed bill, the employer matching contributions, they actually can go into the Roth bucket. Now, if an employee elects to have that matching contribution go into the Roth bucket, they would have some additional taxable income to the extent of the match.
So it also increases the age where people have to take distributions. Is that correct?
It does. So the IRS doesn't allow people to kind of keep their retirement funds in their accounts forever. They need to start taking that money out when they reach a certain age. Now, not long ago, that minimum required distribution age was 70 and a half. Then it got moved to what it currently is, which is 72. And this legislation is looking to move that up to 73 and eventually go up to 75. And I think this makes sense because, people are living longer.
Yeah. Now, it also makes more people eligible to participate. Is that correct?
Yeah, the legislation does make long-term part-time employees eligible if they've been with the company for 2 years or more.
And I also know that it does a few other things, correct?
It does. It creates a national database to find lost retirement accounts as people change jobs. It also allows for 403B plans that have more features similar to the 401k. Now, a 403B plan is essentially a 401k plan that's offered by governments and nonprofits. And it also adds some new investment options, such as lifetime annuities. So, if this is passed, it's going to give employers and employees additional options to help secure people's retirements. And, as we've discussed in the past, anything that can be done to secure people's future is really a good thing.
Jeff, a lot of great information each and every week here in the program. How do listeners connect with the team at Hawkins Ash?
Now, I don't talk about this enough, Terry, but, you can hear this show replayed on YouTube and other social medias. And my coworker, Kyle Hunt, also does a tax tip every Tuesday. So sign up for our social media and you can get all this great content.
Awesome, Jeff. Thank you for your time, my friend. We'll talk to you next week here in Tax Tips on WOMT.
This has been Tax Insights, presented by Hawkins Ash CPAs. Learn more online at hawkinsashcpas.com. Hawkins Ash CPAs, part of your business, part of your life.